Now let's get straight on to a CNBC-TV18 exclusive. We learned that the RBI is planning to come up with a new circular to tackle bad loans after the Supreme Court's verdict on the February 12th circular. Sources say that the RBI will not seek a review of the Supreme Court's order. Lata Venkatesh joins in with all of those exclusive details. Lata, what are you picking up?
The debate apparently within the RBI was whether to ask the Supreme Court that if its objection is to only one clause, whether that clause can be dropped and the circular can stand. Remember, what did the court say? That under Article 35AA, or rather Section 35AA of the Banking Regulation Act, the Reserve Bank can give a specific direction of a specific case to be taken to IBC, but it can't issue umbrella orders. And it should be done usually along with the government, giving it along with consultation with the government. These umbrella orders are not allowed. But that's only one clause of the February 12th circular. So there was a legal opinion within RBI saying that we could ask for a review and just drop those clauses. However, the opinion that appears to have won is that one can use this opportunity to actually iron out, take some learnings and rewrite the circular entirely, dropping all references to IBC, but making it maybe a little more easier for banks to tackle and resolve cases. Maybe there will be a debate on whether to bung in that 66% vote is enough and not 100%. Maybe that will be one debated point, whether it should be default on the day of payment due or whether a little leeway can be given. All these could be debated and a new circular could be written, and it looks like the latter party has won. We understand that consultations have already started, but there's no timeline that we have on when the circular will be written up.
Well, stay on, Lata. Also tell us what the RBI MPC will do today. Another 25 basis cut?
25 basis, I think, is consensus. I won't even call it majority. But when it comes to the stance, it is not still a full consensus that expect accommodative stance. You know, the importance of the accommodative stance would mean that there are a few more rate cuts, or at least one or two more rate cuts. And there may be some in the Monetary Policy Committee who may not want to sound that dovish. Also because, you know, only the previous policy you changed from calibrated to neutral. So do you want to change that early? So there could be a debate on that, but still the majority is winning out that it is likely to be changed to accommodative. But the big point will be if they keep it accommodative and 25 basis, if they cry a lot over growth, I mean, grumble so much that there's so much slowdown, then the chances are that there will be more cuts. So the tone on growth, the last number we have is 7.2 for Q1 and rising up to 7.5% for Q3 of the current year. If it is significantly lowered and there are lots of adjectives put in, then the market will be very happy because that would mean that there are more chances of cuts. But beyond all this, all eyes are going to be on liquidity. Are they going to actually say that they will move from the current neutral liquidity, that is sometimes RBI is taking money from the market and sometimes it is giving money to the banks in the repo window? Will they bat for neutral? Usually it is the banks who are borrowing from RBI. If they move to a situation that there are more days when RBI is borrowing, taking money from the banks, if any such statement indication comes, the market will be rapturous. I don't know whether they would actually make that statement. So you'll very closely watch on how many more dollar swaps, how many more OMOs, because that's what will lead to that stance. But the biggest surprise, and I think that's what you're waiting for, will there be a 50 basis cut? You know, it's not the market's base case, or I mean, it would be 1% in the market which would expect a 50 basis point rate cut, for the simple reason that maybe the governor may not even be able to muster the votes. And then you've just got this monsoon, you know, maybe dibbly-dobbly warning, which means food prices could anyway go up. And then there is the fisc and these competing offers. So given all that, to get 4 people to vote for 50 basis is a bit of a tall ask, is what the market is going with now. So if that comes, and if it is CRR, then that will be a shocker. But I am not expecting either of that, 50 basis or CRR.
All right, thanks Lata for all of that. But Lata also spoke to the CNBC-TV18 Citizens Monetary Committee on what they think the MPC should do with respect to liquidity, rate cuts and of course repo rates. Listen in.
At this stage, I think we shouldn't But the point is that transmission will happen. Transmission usually takes multiple quarters to happen, so it will happen. Currency leakage has partly been high because of the elections, so post-elections currency leakage should come down. And if growth is slowing down, you should also expect the incremental credit accretion going forward to be less than what it has been in the past. So the incremental credit deposit ratios will also ease. So things might look extremely tight right now, but I do think over a period of time, given the macro dynamics we are considering, given post-elections, I do think transmission will happen, but slowly. My concern, Lata, is that I think we're seeing a very, very segmented economy, that the entire transmission is only happening largely in the consumer space. And like I said, the divergence between haves and the have-nots, especially the sectors that really need money, I think that's becoming extremely wide, and that's my bigger concern.
Yes, there is a trust deficit with respect to several NBFCs. I take your point. But, okay, let me get to Soumya. Do you think the policy stance should change? I mean, even if the RBI doesn't make reverse repo the, guiding force, put so much liquidity, should it, change its language to accommodative from neutral?
I think yes, given the current growth condition, given the fact that, growth is going to remain weak for the next couple of quarters, I think you need to cut rates, given that you have to do the policy heavy lifting to the monetary policy, and possibly one rate cut will not suffice. Possibly a larger rate cut will suffice, but the issue is that whether you need to cut at a larger rate, more than 25 at one go, or you want to spread it over.
Dr. Sen, the last word, sir. What should the Reserve Bank do in terms of rate action, in terms of liquidity? And you were the one who is warning about overkill.
Yeah, my sense is that the RBI will need to actually, and this is a timing issue rather than what should be done. I think liquidity has to be increased. Rates will eventually have to be cut. The question is, which do you do first? Which do you do second? Do you do both simultaneously? This is a strategic issue. My own personal view on this is that RBI is going to be focusing on the liquidity side for the time being, and they will worry about rate cuts a little later.
Well, time to slip into a short break. Up next, the Jet Airways crisis continues. 10 to 12 slots of the airline have been transferred to SpiceJet and Indigo. More details when we return.